The fund started in September of 1997, so it's a little more than 10 years that the fund has been operating. The annualized rate of return is 13% annualized versus the S&P over the same period has done about 6%. So we've annualized at about 7 percentage points better than the S&P. I mean, when I started the fund, unlike one of the other conference participants, Kemp Schubenstein, had not been investing for a large number of years, and I had the vast majority of my family's money with me. So I was very conservative. For the first 2 or 3 years, I had more than 50% of the fund in cash. And the first thing that I did was I started looking at other good investors to try and understand why they invested in what they did. And what I found very quickly was that the place that I was most comfortable with were primarily branded goods companies, which gave me a huge universe to look at. They were high quality businesses. I was pretty sure I would not lose money in them. So in terms of where I look, there are 4 different industries that I spend most of my time in. I spend my time in branded consumer goods, the credit rating business, the for-profit education business, and then various kinds of infrastructure businesses. And I rarely look outside of that area. And I'm trying to buy better businesses at a good price. Without question, the biggest success I've had was to invest in a company called Raffles, where, and this happened 3 or 4 years ago, I had learned enough about investing to realize that I needed to concentrate on my best ideas. And I invested, it was my best idea without question. I invested 6% of the portfolio into that company, and it went up about 5 times. Of the $100 million that I'm running, $20 million was profit that I took out of that position. So that is by far and away my biggest success.
Okay. And your biggest failure?
I would give 2. The first is, in general, I have been very bad at selling, and I've often held positions for far too long. In one case, I held shares in an education company called EVCI Education. It had appreciated 7 times, and I was a little too in love with the business and did not pay enough attention to the valuation. And then some bad things happened to the company, which I probably could have foreseen. But I went from having made 14 times my money to ending up only making 2.5 times my money, which was a lot of money that I left on the table. So that was one big mistake. And another big mistake in general has been not to sell positions when they've reached full value. And I think that I'm learning my lesson, actually, in these current market conditions. I hope I will not be doing that in the future.
Okay.
I mean, I'm absolutely ecstatic to be here. I was excited to come here before I even knew what was going to happen. And everything from the quality of the people, from Francisco and Alejandro, to the other staff at Sabino Capital, to the people who picked us up from the airport, to the quality of the participants, to visiting the museum, and the kinds of meals that we've had have been absolutely incredible. And as somebody who's married into a Mexican family and feeling half Mexican, I'm even proud of Mexico for putting on such an amazing event.